starting with Larry Kudlow. I began by asking him to expand on the president's message of booming American growth that he brought with him to Europe. The president's message this week in Davos at the World Economic Forum is growth. How to achieve growth, how the US has achieved growth, and what it means for the rest of the world. Flesh out that message for us.
You know, I like to call it the blue-collar boom, and America's working, and President's policies of tax cuts and deregulation and opening energy and reducing trade barriers. And really for the first time, Jerry, at least since the 90s, if not longer, the middle and lower end of the wage earners are outpacing their bosses in terms of growth. And we think that's terrific. And it's, 3.5% unemployment rate with no inflation just shows you that liberalizing the economy can work and create stronger growth. Hopefully, other countries will think about similar moves, and we'll be talking to everybody here, of course. And, the other point he's going to make is a fair amount of trade. He talked about trade at some length. We're very proud of our China Phase 1 deal, frankly, got probably more than we expected. And that's going to be a big plus, not only for some of the structural issues like intellectual property, but the schedule of American export increases across the board in agriculture and manufacturing and financial services and digital services is terrific. We will talk about the North American free trade, the USMCA deal. So we've got a lot of positives to go through. I want to get into a lot of the trade talks in detail with you, but sticking with growth for a moment, yes. The US has outperformed the rest of the world, with the exception of China, obviously, but outperformed the developed world in the last few years. But it's still, US has grown at an average of about 2.5% in the last few years. Yes. The president wanted to grow at 4%. You've talked about growing maybe at 3. 4, yeah.
3. In the past, you've said the Federal Reserve, the fact we could be stronger, and we haven't been as strong as we could, has been on the Federal Reserve. You still feel that?
Well, we had the growth going up to near 4%
in 2018.
In 2018. I mean, 2017 was a good year. 2018, then we had a kind of monetary restraint program that I still don't really understand. But in any case, I do think that's had an impact. And fortunately, the Fed has shifted direction, which is a good thing. And they might even be bolder for all I know. It'd be okay with me. So I do think that slowed us down. But I think coming into 2020, that I think the trade deals lift a lot of uncertainty and stabilize that story. So we're hoping for more business investment.
So would you say, is that implication that maybe the uncertainty about trade and maybe the tariffs has actually also been restraining growth somewhat in the last couple of years?
I think it is. I mean, I hear that from some businesses. I don't know how to weigh that relative to monetary policy, and it's hard to measure these things, as you know. But in any event, we pulled back some of our tariffs. We're still keeping quite a lot of them as leverage to see if China works through the agreement, as we hope they will. And we figure it's probably worth 0.5 point of GDP this year and next year at least. And we think the USMCA deal will probably be worth 0.5 to 0.75 percentage point of GDP. If I can get Boeing to produce more airplanes now, that would help also.
They got some particular problems.
That costs us 0.5 point of GDP. I mean, so that's a little tricky. But we're happy with our position right now.
Is there you've talked again a lot about more tax reform, Tax Reform 2, aimed particularly perhaps at middle classes who did get a tax cut last time but didn't get as big a tax cut as people who are better off. Is that a priority for 2020?
Yes. Now, we don't expect any legislation, as I've said. Tax cuts 2.0. The president commissioned me to come up with a plan that will enhance middle-class tax relief and middle-class wage increases. I mean, as an old Reagan guy, Reagan used to talk about take-home pay. And take-home pay is roaring right now in the U.S. And it's right in that middle to lower middle zone, growing by some $5,000 per household. And that's a big deal. I think we can still reform the code. I think it's interesting, Jerry, that the business tax cuts had the intended effect of helping the Main Street wage earner. That was what Kevin Hassett and Steve Mnuchin and I thought about.
But didn't produce the investment that a lot of people thought. The capital investment, we haven't really seen that from those corporate tax cuts, which a lot of people predicted.
We saw a big move in the first several quarters before the Fed came to town. That's what we saw. Now, mind you, the biggest move in business investment is intellectual property and related software, which is growing at a rapid clip, 6, 7, 8%. That's continued. It's the heavy equipment part. And it's interesting, there's some economists who think, you know, the shifting of these economies today with all the advanced technologies, maybe the heavy equipment is not ever going to produce what it's produced, you know, when you and I were going at it and in the past. I don't know. It's an interesting thought. We'll wait and see. Just
quickly, because we've got to take a quick break, but you're not concerned about the fiscal deficit? Are fiscal concerns a thing of the past? We've got $1 trillion deficit now. You did say that the tax cuts, the first tax cuts would help to, generate enough revenue to offset that. Didn't seem to happen. Is it just let rip now on fiscal policy?
Well,
the economy can take anything?
I want to say, revenues are rising. Revenues are rising. Corporate revenues are rising. Individual revenues are rising. Now, if you ask, are we spending too much? I think the answer is yes. But then I have to say, politics is the art of the possible. There's no appetite in this Congress to really lower spending. But the 10-year, I use that as a bellwether. It's at 1.8%, more or less. And I think if deficits were such a big problem and all those shibboleths about crowding out, it would be much higher. So I don't think at this juncture the deficit is a problem, but I think a second-term Trump administration will probably pay much more attention to the spending side.